Imagine this. It's July 2026. You're sitting at your desk, getting ready to file a tax return for your client. But wait, you're suddenly staring at two completely different income tax acts. Which one do you use? The old 1961 Act or the brand new 2025 Act? Well, welcome to this explainer. I'm absolutely thrilled you're here, because today we're going to decode Chapter XV of the new Income Tax Act 2025. This covers sections 262 to 267. It's basically your ultimate blueprint for the return of income, and we're going to make this whole transition incredibly simple and clear for you. So let's dive right in.
Here's the absolute critical question every chartered accountant, student, and tax professional is facing right now. Are you applying the correct act to the correct financial year? Because when April 1st, 2026 hits, the 1961 Act is technically repealed, but its provisions don't just vanish into thin air. They actually continue to govern the income you earned before that date. This creates a really unique transition period where both laws are essentially alive at the exact same time. And honestly, making a mistake here could mean defective returns, invalid challenges, and just a whole lot of unnecessary headaches.
Now, because of this, there's a fundamental shift happening in our daily tax vocabulary. Under the old 1961 Act, we always spoke in terms of the previous year and the assessment year. Well, the new 2025 Act completely simplifies this whole shebang. We're officially saying goodbye to the term assessment year. Moving forward, we're simply going to use the term tax year. So, if you're looking at income earned in the financial year 2026-27 that is now filed for tax year 2026-27, it's a fantastic structural clarity that really aligns us with modern global standards. So here's our quick agenda for this explainer. First up, return filing during transition. Second, Section 263 legal provisions. Third, types of tax returns. Fourth, practical filing examples. Fifth, verification and compliance points. And finally, a quick summary and key takeaways.
All right, let's kick things off with Section 1, return filing during transition. The crucial point here is this step-by-step breakdown. Step 1, for the income you earned in financial year 2025-26, you are still entirely governed by the old 1961 Act. You're going to file this in July or October 2026 as assessment year 2026-27 using those old ITR forms we're all used to. Step 2, for the new financial year 2026-27, that's when the new 2025 Act kicks in. You'll file this the following year as tax year 2026-27 using the brand new forms. And step 3, please don't worry about the technology side of things. The CBDT FAQs have confirmed that the e-filing portal is going to seamlessly run both acts concurrently, so there's absolutely no double filing required. Moving right along to Section 2, Section 263, Legal Provisions. So, Section 263(1) of the Income Tax Act 2025 is basically the direct replacement for our old friend Section 139(1). The main objective remains exactly the same. It mandates that companies, firms, and individuals must furnish a return if their total income exceeds the basic exemption limit. And just like the old law, you've got to calculate this threshold before giving effect to specific deductions. I'm talking about the ones under Chapter IVE or Chapter 8, which, by the way, replaces the old ADC and similar deductions. Simply put, if your gross income crosses that limit, you are legally bound to file. No way around it. Now, if you're getting a bit anxious about learning a bunch of new deadlines, take a deep breath. Under Section 263(1)(c), the government has actually retained our familiar timeline. For your regular non-audit individuals and HUFs, the due date is still 31st July. For corporates, working partners, and any businesses whose accounts require an audit, it remains 31st October. And for those complex cases involving transfer pricing under the new Section 164, your deadline is 30th November. Having this consistency is honestly a massive relief when you're trying to plan out your compliance calendars.
Next up is Section 3, Types of Tax Returns.
This framework really builds out your compliance safety net. Under Section 2634, if you happen to miss that original deadline, you can still file a belated return within 9 months from the end of the relevant tax year. But what if you made an error and need to fix it? Well, Section 2635 gives you 12 months from the end of the tax year to file a revised return. And then we have the updated return, the famous ITRU. Section 2636 allows you to file that one within 48 months from the end of the financial year succeeding the relevant tax year. Just keep in mind, all these timelines are subject to the completion of assessment, whichever happens earlier.
Okay, let's put this into practice with Section 4, Practical Filing Examples.
Let's imagine it's July 2026. Step 1.
You're super busy filing the ITR for FY 25-26. You're logging into the portal, you're selecting assessment year 2026-27 and applying the old 1961 Act. But wait, step 2 is happening simultaneously. In that exact same month, your client also needs to pay their first installment of advance tax for the current year. For this payment, you've got to select tax year 2026-27 under the new 2025 Act. And finally, step 3, fast forward a year later to July 2027. You'll file the return for that income using the brand new forms under the 2025 Act. It's like a giant puzzle where you have to compartmentalize the old and the new at the exact same time.
Let's shift our focus a bit in Section 5, Verification and Compliance Points.
Section 265 of the new Act dictates exactly who can verify a return. And honestly, I've got some good news for you. There is absolutely no substantive change from the old Section 140 of the 1961 Act. An individual still has to verify the return themselves, or they can do it through an authorized agent if they're mentally incapacitated or happen to be absent from India. For a company, the managing director is the one who verifies it, and if the MD is unavailable for some reason, any director can step in. It is definitely reassuring to see that these core administrative mechanics remain identical. It provides some really nice stability for practitioners.
Crucially, we also need to look at how this interplays with the newly drafted Income Tax Rules 2026, specifically Rule 66, which prescribes the actual forms we're going to be using. For instance, the beloved Form Sahaj, or ITR-1, is explicitly mentioned for resident individuals with income from salaries, one-house property, and other sources up to 50 lakh rupees. So while the forms are going to look pretty familiar, they'll be fully updated and aligned with the new sections of the 2025 Act.
Now, please pay close attention here because these are the common practical issues that will absolutely cause notices to fly out of the portal. First up, selecting the wrong assessment year or tax year on your challans. If you pay advance tax for the new year, but accidentally select AY 2026-27, that credit is going to the wrong year. Second, for any transaction after April 1st, 2026, you cannot quote old TDS sections. If you quote the old 194C instead of the new Section 393 for a contractor payment, the system is going to throw a validation error. Third, you absolutely must meticulously reconcile Form 26AS separately for the transition years. Do not mix them up, folks.
Let's wrap things up with Section 6, Summary and Key Takeaways.
Here are your 4 golden rules to memorize today. Number 1, FY 25-26 is the old Act, and FY 26-27 is the new Act. Keep them completely separated in your mind. Number 2, Section 263(1) is your new best friend for due dates, and they haven't changed a bit: July, October, November. Number 3, memorize those 9, 12, and 48-month cascading deadlines for belated, revised, and updated returns under subsections 4, 5, and 6. And lastly, administrative hygiene is literally paramount right now. Ensure all your challans, TDS quotes, and portal selections accurately reflect whether you're operating under the assessment year of the old Act or the tax year of the new Act.
You know, the laws are written, but the real test happens right there at your desk. Is your practice ready to seamlessly handle this dual compliance load, or will transition errors end up costing your clients? How smoothly you manage this shift is honestly going to define your success in 2026 and 2027. So keep these provisions right at your fingertips. Thank you for watching. Please like, subscribe, and share. Disclaimer: this video is for educational purposes only and does not constitute professional advice. Tax laws are subject to amendments. Please consult your professional advisor before taking any action. This is an AI-generated educational video.